This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices rebounded on Thursday as U.S. crude and gasoline stock drawdowns lent support despite signs that the U.S. Federal Reserve may keep interest rates higher for longer. Brent crude futures for May rose 55 cents, or 0.6%, to $86.50 a barrel by 0400 GMT, after falling 1.6% on Wednesday. U.S. West Texas Intermediate futures for May climbed 47 cents, or 0.6%, to $81.74 a barrel, after sliding about 1.8% in the previous session. Crude inventories in the United States, the world's biggest oil consumer, fell for a second week, the U.S. Energy Information Administration reported on Wednesday.
U.S. crude oil stockpiles fell unexpectedly last week as exports rose and refiners continued to increase activity, while gasoline inventories decreased more than expected, the Energy Information Administration, EIA, said on Wednesday. Crude inventories fell for the second week in a row, dropping by 2 million barrels to 445 million barrels in the week ended March 15, the EIA said, compared with analysts' expectations in a Reuters poll for a 13,000-barrel rise. Gasoline stocks continued a seventh straight week of drawdowns, falling by 3.3 million barrels to 230.8 million barrels, the EIA said. Analysts had projected a 1.3 million barrel draw.
Moving on to the top news in the energy sector.
Price-sensitive liquefied natural gas buyers from China, India and parts of Southeast Asia are snapping up more spot shipments of the fuel to power industries and generate electricity after prices have fallen to the lowest level in nearly 3 years. The price-led demand revival could push LNG imports by the world's top buyer China beyond its record volume of 78.8 million metric tons in 2021 and also raise India's imports by about 10% this year, analysts said, tightening global supplies and ultimately lifting prices. Spot LNG imports by Asian buyers increased by nearly a third in the first quarter of the year to 161 cargoes, according to data from S&P Global Commodity Insights, when spot Asian prices averaged $9.82 per million British thermal units, MMBTU.
Rising oil tanker chartering rates due to global shipping disruption are forcing oil shippers to take on longer-term shipping charters, executives said this week at an energy conference in Houston. The global oil tanker fleet must now travel further to get crude to refineries and fuel to consumers. European sanctions have forced Russian exporters to send oil to Asia that would have otherwise gone to Europe. Attacks on vessels in the Red Sea have forced some shippers to sail around Africa. Low water levels in the Panama Canal have also led some vessels to take alternative routes. Next, we have the top news in metal markets. In the usual way of things, platinum and palladium should be turning higher after a slide from recent peaks drove supply deficits, job cuts and looming mine closures in top producer South Africa. That they're not shows how hard the electric car revolution has hit demand forecasts. Along with close relative rhodium, the two metals are chiefly used in the catalytic converters used to clean exhaust fumes by the auto sector, an area that accounts for some 40% of platinum demand and 80% of palladium offtake. Losing that demand will be significant for all three metals, and for palladium and rhodium, there is currently no other industry that can realistically replace the volumes that will be lost as consumers transition to electric vehicles, which don't need auto catalysts.
Inventories of lead in warehouses registered with the London Metal Exchange surged 34% to the highest level in 11 years, LME data showed on Wednesday, highlighting excess supplies of the metal mainly used in combustion auto batteries. LME lead stocks jumped by 67,350 metric tons to 267,075 tons after arrivals of metal in warehouses in Singapore and South Korea, the highest since March 2013. The inventories have more than doubled since the start of February. Macquarie expects a surplus in the global lead market of 76,000 tons this year and 138,000 tons in 2025.
We will now look at the top news in the agricultural sector.
Chicago soybeans rose for a second session on Thursday to hit a 2-month high, as excessive rains in Argentina raised worries over supplies and triggered short covering. Wheat rose for a third session in 4 and corn bounced back. Beans seem to be the main driver at the moment because of Argentina's storms, said Andrei Sizov, managing director at agricultural consultancy Sovecon. The funds were already in short covering mode and the weather disruption seemed to speed things up substantially. Looks like some funds were caught off guard.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.